I profited off his death.
3, 2, 1.
It's payday on the beautiful shore! Yeah.
What could be bigger than your eternal resting place?
Let's talk about shorting a SpaceX rival, Elon Musk and the PayPal Mafia, venture capital explained from scratch, Sputnik and DeepSeek, and these other finance lessons from the 4th episode of Billion Season 3 based on my work experience at Goldman Sachs in New York City and based on my work experience as a venture capitalist and at the top hedge funds in the world. Please like, comment, and subscribe, and stick around because at the end of this video, I'm going to grade the episode for Wall Street realism with a buy, hold, or sell rating. In this episode, Axe Capital makes a fortune from shorting a SpaceX rival named Farpoint, run by a guy who's a great salesperson, a lot like Elon Musk.
Heidegger acquired Farpoint.
And the papers want to know whose shirts he wears. How do we ever think to short that smile?
His charm is a liability. It means people believe whatever he tells them.
Speaking of Elon Musk, did you know that since Elon Musk gave Trump $250 million for his campaign, Elon's net worth increased 560 times to $140 billion. Now, we'll come back to Elon Musk and Donald Trump soon. Now, Taylor is initially really unemotional about shorting the SpaceX rival, and the most successful investors are often highly unemotional.
Stock will dump, and they'll be extra cautious with the CEO aboard. Size up on the short.
I will.
My bet is against his business model, not his vision.
So, if the rocket explodes, Axe Capital will make a fortune. Now, fear and then greed sets in as it sinks in how much money they just made on the rocket explosion.
I'll say it. Farpoint is gonna tank. It's payday on the beautiful shore! Yeah.
Now, this is the ugly side of hedge funds, and it's a reason why I changed to doing VC, because in 2008, I was massively short the market in my hedge fund, and I was happy when banks were collapsing, which means people may be losing their jobs and maybe their houses, and I felt sick to my stomach. It felt wrong to be intellectually honest and transparent as always. Now, when I worked in the hedge fund industry, we had psychiatrists on site, which is what we see right here.
I profited off his death.
You lost a hero and were rewarded for it. Mind the truth that makes you money.
And this is a classic ethical dilemma if you work at a hedge fund, just like when Bobby Axelrod profited by shorting stocks on 9/11. And depression and mental health is a big issue people don't talk about with hedge funds. You know, making money your god is sinful, and although people argue that shorting stocks is healthy for financial markets as it makes sure that assets are priced correctly, compassion must come before profits at any cost. And many investors don't have an issue with this as they see business as war.
That's McCarthy. He killed 22 Germans and captured 50. A half kilometer of a trench by his own hand. I can take this board.
So you're an army of one.
Now, war is a common theme in this episode as Bobby is savage.
Savage. Yes, he is. For the cause. As are we.
Now, Taylor then briefs Axe on the short as Bobby is temporarily not really allowed to trade.
Farpoint stock price went the way of its founder. Our short paid big.
This is not realistic. There's no way Taylor would have a conversation like this in a public location. This would be done in private, especially since FBI agents are known to record conversations in public places. In fact, at some hedge funds, employees are told to assume that every conversation on the phone is recorded by the FBI. Now, when I worked in the hedge fund industry, I remember being in bars and restaurants when people at other hedge funds would ask me questions in certain ways. And I never did anything wrong, but it was obvious that they were fishing for something. And what's fascinating about this episode is the influence that the movie Wall Street had on this show. And without the Wall Street movie, this series might not exist.
Gordon Gekko, please.
Oh, Gekko. Gekko's beautiful. 30 seconds after the Challenger blew up, he's on the phone selling NASA stock short.
Now, the finance anti-hero was pioneered by Gordon Gekko, just like an anti-hero is Bobby Axelrod or Tony Soprano or the Penguin. Side note, did you know that Donald Trump was in Wall Street #2, but this scene here was cut?
How's life, Gordo?
Life is fine, especially with a hot new hedge fund, enjoying my exile here in London.
Got no hedge fund. Are you kidding? The economy's terrible. But you know what? Send me the details.
Let's talk about immunity.
Don't say a thing until they say the magic word.
We are prepared to offer you immunity.
That's the one.
So on Wall Street, immunity works like a legal shield, protecting companies or people from penalties if they follow the rules or help investigators. Now, an example of this is Bernard Madoff's employees in his multi-billion-dollar Ponzi scheme in exchange for their testimony against Madoff. Now, I always knew that Madoff was guilty because his name is Madoff. You know, he made off. Sorry, awful dad humor. But in the hedge fund industry, it's a tough decision to partner with the government and get immunity, because if you do, then it's very hard to ever get a job again in the hedge fund industry. That being said, if the government threatens an employee with jail time, then they might have no choice to cooperate, like what Bud Fox did with Gordon Gekko in the movie Wall Street right here.
I showed you how the system works, the value of information, how to get it. This is how you pay me back, you cockroach.
You did the right thing, bud.
Now, when it comes to immunity, in this episode, Chuck Rhodes' father wants immunity from his role in the corrupt Ice Juice IPO that Chuck and his father participated in.
We're aware of your involvement in the Ice Juice IPO.
But the government is crazy to ask Chuck's dad this.
You must think I'm a physical moron. That's Victorian for understand. You want me to testify against my son at my peril.
Now, Bobby Axelrod knew that Chuck and his dad were investing in the Ice Juice IPO. And actually what he did was he put poison in the juice to destroy the IPO. And for more detail on how an IPO works, using Ice Juice as an example, please watch this video here. Now, Bobby has 2 private investigators that he hired, or fixers, to fix his problems.
We have eyes on the 3 labs in the tri-state area capable of production and storage of the Ice Juice toxicant.
FBI is interviewing the lead techs at each of them. They'll be on hours soon.
By the time they get to our lab, make sure there is no lab.
Got it.
Now, hedge funds are known to hire private investigators or forensic accounting experts to help them make money. An example of this is during Bill Ackman's high-profile short campaign against Herbalife. He hired forensic accountants as well as private investigators and PR firms to help build his case and manage the fallout. And this included hiring firms like FTI Consulting to analyze Herbalife's business practices. Now, Bill Ackman did nothing unethical and he did nothing wrong, unlike Bobby Axelrod, who is corrupt. Now, another example is Danny Loeb's Third Point hedge fund also hired FTI in 2015 to help with his Yahoo investment thesis, including Yahoo's stakes in Alibaba and Yahoo Japan, in order to identify undervaluation and potential areas of mismanagement. And like Ackman, Danny Loeb is not corrupt, unlike Bobby Axelrod. And remember, just because somebody is sued by the government does not mean that they're guilty. As you're innocent until proven guilty, don't ever fear a lawsuit. Now, other forensic accounting firms that hedge funds pay to help with investment ideas include Hindenburg Research, who nailed the Supermicro short, as well as Muddy Waters Research. Now, Hindenburg shut down recently, but if you wanted to monitor high-profile hedge fund short ideas, you can always go to alerts.google.com and set up an alert for Muddy Waters Research or other short-selling advisors. And you'll get an email when they come up with new short ideas if they're written about in the news. So how can you do research on short ideas when it comes to forensic accounting? Well, it's much easier than you think. And it often involves finding patterns in financial statements, like declining organic revenue growth, or a decline in deferred revenue, or a spike in off-balance sheet items when you read them in annual reports. And here's a great book to help you with your short ideas. Now, when I worked in the hedge fund industry, I hired Howard Shillett when he ran his firm CFRA, who gave me many great short ideas. Now, instead of hiring him, I recommend that you buy this book here called Financial Shenanigans: How to Detect Accounting Gimmicks and Fraud in Financial Reports. I also teach about forensic accounting, which can help you with long and short ideas using my 100-step research framework, as you can see right here, which is available in my MBA degree programs at this link here. I can also help you to use AI products to do forensic accounting, so you can come up with high conviction short ideas using this spreadsheet of mine, where you enter the stock name here, and then the AI prompt level. For example, 8th grade level, which is my maturity, or you can enter a hedge fund level right here. Then I ask you many questions about the company that you're researching. And with the help of AI, you can have a thorough forensic accounting investment research report. You can get these spreadsheets and my financial and other products at this website here. And you can use any AI product in this spreadsheet, including ChatGPT and DeepSeek. Separately, in terms of shorts, Liang Wangfeng, the hedge fund investor that was a sole venture investor in DeepSeek, might have shorted NVIDIA before officially releasing DeepSeek on Inauguration Day on January 20th. If so, do you think this was insider information? Please type your comments in the chat. Thank you. Now, I'm happy that DeepSeek exists because competition is good for the consumer, and this will stop OpenAI, from increasing prices on ChatGPT. But I don't feel comfortable exclusively using DeepSeek, as I don't fully trust it yet. I also believe in freedom of speech. So let's go to DeepSeek and let's type this in. What happened in Tiananmen Square in 1989? You see the response right there. All right, well, tell me what happened on 9/11. So I prefer using ChatGPT. Now, in this episode, Axe gets involved in venture philanthropy.
Venture philanthropy. There's some of that disruption you're famous for.
Disruption works. It's uncomfortable but effective.
So venture philanthropy is like venture capital, but instead of investing in for-profit, investors invest in social good, meaning donations and giving money and support to charities, and they expect measurable results like helping more people. And as Axelrod mentioned, when it comes to disruption, rockstar venture capitalists like Marc Andreessen often say that software is eating, meaning disrupting the world. And his VC firm A16Z always looks for sectors to invest in that have not yet been disrupted by software. Now, Marc Andreessen recently called DeepSeek AI's Sputnik moment. And the reason that you're watching this video, and the reason the internet and the venture capital sector is relevant, is because of Sputnik, which was the first satellite ever launched into space. Let's drill down on this as I explain Silicon Valley and the venture capital sector from scratch, using Elon Musk's role in what is called the PayPal Mafia. So Americans were brokenhearted in October of 1957 when Russia beat the United States into space by sending Sputnik into space. So in 1958, President Eisenhower founded NASA, and in order to boost the depressed American public, JFK said this:
"We choose to go to the moon in this decade and do the other things, not because they are easy, but because they are hard."
Now, in order to put a man on the moon, NASA needed high-powered components to be developed for the rocket. Fulfilling that need was venture capital-backed Fairchild Semiconductor, which was founded here in the San Francisco Bay Area in the midst of the Cold War competition. Now, the guys that founded Fairchild Semiconductor are called the Traitorous Eight because these 8 engineers left Shockley Semiconductor Laboratory in 1957 to found Fairchild Semiconductor. And William Shockley, who was not a nice guy to work for, called them traitors. And the co-founders of Intel, Bob Noyce and Gordon Moore here, were 2 of these traitors. And Eugene Kleiner from VC powerhouse Kleiner Perkins is also one of the traitors here. Now, without the Traitorous Eight, this would never have happened.
No way!
That's great.
We landed on the moon!
Now, as with all big tech companies, they get too big and bureaucratic and they can't innovate. So these dudes quit to start fair children companies here in the San Francisco Bay Area, like AMD and Intel, which was VC-backed. And employees of Intel founded VC-backed companies in the Bay Area like NVIDIA, Broadcom, and Marvell, which were all backed by the best VC company on the planet called Sequoia. Then many hardware, networking, internet, and other tech companies like Apple, Cisco, Google, Airbnb, and PayPal were founded in the San Francisco Bay Area and all backed by VC giant Sequoia. Now, government research led to the creation of the internet in case the East Coast could not communicate with the West Coast if, God forbid, a nuclear bomb landed in the middle of the United States. And software giant Oracle was also backed by the CIA, as the CIA's first notable database was called Oracle. And GPS exists on our phones because of guided missile research. Now, what is it about the San Francisco Bay Area Why was all this stuff created here in the Bay Area? Was it created only because of Sputnik and then the creation of NASA? No. What happened at the same time in the 1960s in the San Francisco Bay Area was there was a hippie movement, make love and not war. And the students at universities out here like Berkeley and Stanford protested because all they knew in their lives was war. Their grandfathers died in World War I, and their fathers fought in World War II, and their brothers and friends were fighting and dying in Vietnam. And so students in the 1960s took over Stanford University because at that time, 50% of Stanford's R&D budget was classified government military weapons research. So Stanford said sorry and pushed SRI, meaning Stanford Research Institute, off campus. And a more open environment was born, meaning open source software. And the culture of sharing everything here in the Bay Area emerged. So the startup and venture capital culture in the San Francisco Bay Area is quite different from Axe's business of hedge fund investing.
Venture philanthropy can work, but it requires a rigorous level of oversight. This group isn't built for that.
And as you can see, the venture folks don't see eye to eye with Axe here.
Spoken like the overpaid day trader you are.
So says the Northern California pipe dreamer.
And ultimately, Axe's difference of opinion got him booted from the board as the board wanted to invest in venture philanthropy.
I motion to remove Robert Axelrod from the World Aid Consortium Board of Directors. Those in favor? The board thanks you for your contribution.
And a lot of finance millionaires want to join boards, not just because they care about the organization, because it's good PR. For example, Bernard Madoff was the chairman of the board of NASDAQ, and this caused government lawyers to be less likely to investigate him. And so for Axe, giving money is for alternative reasons.
You give, we match. During the Give Back charity drive, the largesse of Axe Capital on display.
Side note on Axe joining the board. Please don't ever join a board of directors unless the company pays for your D&O insurance, which stands for Directors and Officers Insurance. Otherwise, you can get sued by investors. Now, hedge funds are short-term focused, of course, whereas venture capital firms think about 5 or 10-year or longer investments. Now, with stocks, people tend to focus too much time on the financial statements and not enough time on the management team. With stocks, we have all heard the legal disclosure that past performance is not indicative of future performance. Now, this next part is controversial, but I think with venture investments in startups, past performance is somewhat indicative of future performance because if you invest in a founder like Elon Musk that has been successful in the past, then the probability that he'll be successful in the future with new startups is higher. And the most important thing with a startup is the quality of the management team.
What is the most popular thing in the world?
Music.
No.
Tell me.
Ice cream.
Okay.
Everyone has it.
Now, venture capitalists and high net worth investors always prefer to invest in an A management team with a B business model instead of investing in a B management team with an A business model.
Okay.
Is you win or is you win?
Okay, well, it sounds like a good idea, and I hope you make a lot of money. Good luck, folks. It's been nice seeing you. You take care of yourself, okay?
Is you going to be in on that?
Well, it sounds like an interesting...
We've got like P. Diddy is going to be...
That didn't age well. Now, when I worked in VC, I was on the board where Sequoia led the A round and we led the B round. And I sat down with Doug Leone from Sequoia, who is a rock star. And I asked him in our 90-minute one-on-one meeting what kind of people he invests in. Because the top 10 venture capital firms on the planet have 1% of their investments in unicorns, but Sequoia has 5% of their investments in unicorns. And Doug told me that the type of founders he likes to invest in are ones that, and I'm going to butcher this, but the best founders to invest in had something happen to them earlier in their lives that leads them to believe that they're not good enough and they have a chip on their shoulder. And they want to prove the world wrong and put a dent in the universe. Now, these are the best people to invest in because they won't sell their company for 10 million or 100 million or 100 billion dollars. For example, Elon Musk, who had the crap kicked out of him as a kid because he was different. So he wants to prove the world wrong, and money is not his sole motivator. And for me, and I'm nobody, but when I was a kid, teachers wanted to fail me in the 6th grade and the 8th grades, and they sent me to a learning disability center for tests. So I want to prove teachers wrong, and I'll never sell my company for any amount. And those who can't teach, And those who can't teach gym class. And I suck at sports, so you're all out of luck. I'm just kidding. I love teachers, sort of. Let's talk more about Elon Musk and the PayPal Mafia, though. And this will really help us thoroughly understand the importance of investing in a great management team with both private and public companies. Now, early employees of PayPal include Peter Thiel from VC Powerhouse Founders Fund. And Thiel was the first notable investor in Facebook and Palantir. And other early PayPal employees included, of course, Elon Musk, as well as Reid Hoffman, who co-founded LinkedIn, the founders of Sequoia, backed YouTube and worked at PayPal, meaning Steve Chen and Chad Hurley were also from the PayPal Mafia. Also, the co-founders of Yelp used to work at PayPal, as did Dave McClure, who is the founder of 500 Startups. And the PayPal Mafia is very powerful here in Silicon Valley. And the jockey is more important than the horse. And so always start your investment research by analyzing the management team. Now, if you want to learn more about venture capital, I recommend this book right here called The Venture Mindset by the #1 venture capital professor on the planet, Stanford Professor Ilya Strebulaev. And I interviewed him recently on my weekly YouTube webcast. A link to the interview is in the description of this video. One more quick comment on PayPal Mafia alumni Peter Thiel. He runs an incredible venture capital firm here in the Bay Area called Founders Fund, as he believes in investing in founders. And I would argue that you should never invest in a publicly traded technology company if all the founders have left. Yes, there are exceptions to this rule like Apple, but I promise you that you will make much more money in the long run by investing in companies that are run by the founders. Because when all the founders leave a company, innovation and risk-taking dies, as senior management is focused on climbing the corporate ladder and not innovating or risk-taking. Why is this the case? Because if a senior executive takes a risk with a new product and fails, then they will stop climbing the ladder and they will lose their job. So the risk for them is taking a risk. And for more details on this topic, please read this article that I wrote in VentureBeat when I used to work in venture capital. The link is in the description of the video. Now, many people don't think venture philanthropy works, as they don't take on enough risk, as there is no financial incentive to do so. But what about Bill Gates' initiatives?
The charities you give to are blind to the problems they aim to solve. Even Bill Gates. He gave malaria nets, and people used them as herring nets. Only they were coated in chemicals. So coastal West Africa ends up with depleted and inedible fish stock.
So what Taylor's referring to is Bill Gates' distributed insect treatment malaria nets. But some people use them for fishing instead, and this contaminated waters and depleted fish stocks. And this really highlights how well-meaning financial aid can have unintended harmful consequences. And there's plenty of examples, like providing food or clothing, which can bankrupt local farmers and clothing producers. Now, in venture finance, good intentions without profit as a motivator can lead to unintended consequences. Now, I believe in charity, but there has to be a profit motive in order to incentivize scalability. Let's talk about grading of this episode for Wall Street Realism with a buy, hold, or sell rating. The episode did an awesome job of highlighting the ethical and emotional dilemmas of profiting off of debt. And many top hedge funds have in-house psychiatrists like Wendy, who in real life used to work at a hedge fund. The episode also did a great job of showing how the government offers immunity to those that cooperate. And lastly, the episode did a superb job of highlighting the contrast between venture investing and hedge fund investing. As a result, I'm going to give this episode a buy rating. Please like and subscribe, and I'll see you soon in our next reaction video when we react to Billions Season 3, Episode 5. Thank you.